Welcome back, everyone. Today, we've got a really exciting explainer lined up for you. We're doing a total data-driven deep dive into Merchants Bancorp. We're going to cut through all the noise and look exactly at where they stand right now by crossing their latest SEC filings and earnings reports with algorithmic market data. So, if you want the real, unvarnished look at what's driving this financial institution today, well, you're in exactly the right place. Let's get right into it.
Real quick, here's our roadmap for today. We're going to start by meeting Merchants Bancorp and looking at their massive Q1 2026 financial highlights. Then we'll break down their business segments and strategy, followed by a look at governance and executive pay. Finally, we'll cover how they overcame some recent regulatory hurdles and wrap up with current market sentiment and signals.
Section 1. Meet Merchants Bancorp. Let's get a quick snapshot of who we're actually talking about before we start tearing into their balance sheets. So, Merchants Bancorp, you'll see them trading under the ticker MBIN on the NASDAQ, is a diversified bank holding company. They're headquartered in Carmel, Indiana, and operate mainly through their subsidiaries like Merchants Bank of Indiana. But don't let the local name fool you. They aren't just your standard corner branch bank. They actually have a pretty massive national footprint in some very specific lending sectors. And just to give you a sense of the sheer scale we're dealing with here, take a look at this. $20.3 billion. That's their total assets at the end of the first quarter of 2026. Literally the highest level of assets this company has ever reported. So right off the bat, we're looking at an institution carrying some serious financial weight. Section 2, Q1 2026 financial highlights. And honestly, that $20 billion milestone is the perfect segue into these numbers, because the momentum we're seeing here is pretty wild. Just look at this year-over-year growth. Net income jumped 16%, landing at $67.7 million. But the thing that really jumps off the page, the diluted earnings per share, it skyrocketed from 93 cents to $1.25. That is a massive 34% increase. It's a huge indicator that they are generating profits incredibly efficiently on a per-share basis. The chairman and CEO, Michael F. Petrie, summed up this momentum perfectly. He noted that achieving record-high assets of $20.3 billion and a record tangible book value of $38.55 per share really underscores the strength of their balance sheet. And that tangible book value is absolutely crucial here. It jumped 10% year over year, which basically builds a really solid fundamental floor under the stock's valuation. Section 3, Business Segments and Strategy. Let's look at the engine under the hood. How exactly are they pulling off these record numbers? Well, Merchants Bancorp isn't putting all its eggs in one basket. Their business model is split into 3 core segments: multifamily mortgage banking, mortgage warehousing, and traditional banking. Management is super clear that this setup is intentional. It insulates them. If one sector takes a hit from cyclical economic swings, the others are right there to pick up the slack. Let's break those down a bit more. The multifamily side is heavily involved in affordable housing, healthcare financing, and even syndicating low-income housing tax credits. Then you've got the warehousing segment, handling commercial loans and deposit services. Finally, the banking side covers your retail, ag, and correspondent banking. But here's the coolest part. It's like a perfectly tuned engine. The banking segment actually funds the multifamily loans that the multifamily segment originates. They feed right into each other, keeping capital moving internally and keeping operations highly efficient. Section 4, Governance and Executive Pay. When you have a complex machine like that, you need highly motivated people running it. So let's see how the executives are actually getting paid and held accountable. If we dig into the proxy filings, we see their bonuses are based on 3 equally weighted metrics: total revenue, earnings per common share, and return on average total equity. I love seeing this. By tying bonuses directly to EPS and ROE, the board is structurally forcing management to focus on shareholder value. Simply put, if the shareholders aren't winning, the executives aren't getting those big bonus checks. Shareholders even get a voice on this through the Say on Pay advisory vote. And something else we really need to point out is the board's strict clawback policy. If the bank ever has to restate its financials because of material non-compliance, the board can literally claw back excess incentive pay from those executives. It's a built-in safeguard that mitigates unnecessary risk. Section 5, Overcoming Regulatory Hurdles. Now, we've got to be objective here. No deep dive is complete without looking at the bumps in the road, right? So let's talk about the regulatory hurdles they ran into back in 2025 and how they handled them. If we rewind to Q2 of 2025, the results were, well, a bit of a mixed bag.
Earnings completely missed expectations, coming in at just 60 cents per share against an expected $1.12. Ouch. But on the flip side, operational revenue actually beat expectations, hitting $179.2 million against an expected $159.2 million. So while the bottom line was clearly under pressure, their core operational revenue engine was still running incredibly hot.
So what was actually going on behind the scenes? Well, in June 2025, the bank got hit with a Memorandum of Understanding, an MOU, from the FDIC and the Indiana Department of Financial Institutions. Basically, they were required to maintain specific capital thresholds and get a handle on asset concentrations. But here's the turnaround. By December 2025, management successfully pushed their capital past those required levels. Fast forward to the Q1 2026 filings, and the MOU was officially terminated. They cleared the hurdle entirely.
Section 6, Market Sentiment and Signals. All right, so we've got record fundamental growth and a totally resolved regulatory turnaround. Let's see how the market is actually pricing all this in right now. We pulled some recent quantitative data from Stock Traders Daily from late June 2026, and the algorithmic setup suggests that a mid-channel oscillation pattern is in play. In plain English, the stock is actively bouncing up and down between some very clearly defined support and resistance levels, which gives market participants some pretty strict mathematical parameters.
Looking at this multi-time frame analysis, the algorithmic signal is rated strong across the board, near-term, mid-term, and long-term. That definitely supports an overweight bias. If you're looking for the actionable numbers, that long-term support is sitting at $47.59, with long-term resistance up at $52.37. So it's a very highly structured technical environment.
Which brings us to our final takeaway. You've seen the whole picture now: the internal synergy, the executive alignment, the successful regulatory turnaround, and those record-high $20.3 billion in assets. But you've also seen the strict algorithmic channels the stock is currently locked into. The big question you have to answer now is, how do you personally weigh MBIN's explosive fundamental growth against these technical market setups? Does this intrinsic fundamental momentum finally shatter that algorithmic ceiling, or do the technicals dictate the limits for now? Think about that. Thanks so much for joining me on this deep dive, and I'll catch you on the next explainer.